In this short video, we're going to be talking about QuickBooks and we're going to be looking at a QuickBooks statement. And so QuickBooks is very interesting looking at their statements for several reasons. First of all, their transaction fees are normally, extraordinarily high. Also, their statements don't provide a lot of detail. But before we really get into this statement, I want to talk about how they're able to pull this off and kind of talk about QuickBooks in general, since this is more of an advanced course here. And I want to help you to understand a little bit of how QuickBooks is moving forward and why this is so crucially important. So QuickBooks makes money primarily in three different ways. The first way that they can make money is through the sales of their software and their online subscription service. So they have QuickBooks Online, and we'll actually go there real quick here. Here we see QuickBooks Online, and this is actually a subscription service. And so you can see here, you can click on Buy Now, and you have your different monthly fees here. So they make money off of this. However, they also make a lot of money off payroll processing, which I'll click on right here. And so this is in addition to the QuickBooks pricing you just saw. And so on average, a business owner using QuickBooks Online is spending between $50 to $100 a month on QuickBooks because they have several different upgrades and things of that nature that you can actually get. Now, the third way that QuickBooks makes money, and they make money a lot of different ways, but the third primary way, and the one that's really giving them the hardest time right now, is their merchant services. And this is through their parent company, Intuit. And they make money on merchant services. And the way that they've been able to make so much money over the years is because it was very difficult, actually impossible, to integrate with QuickBooks. The credit card processing with QuickBooks, unless you used the QuickBooks merchant services. One of the biggest ironies of this for me has always been working with people who have a QuickBooks point of sale system, which even the QuickBooks point of sale software actually for a long period of time didn't integrate with the QuickBooks payments even. It was an amazing thing that they had no integration set up. Now here's the problem that they're running into today, and so it'll be very interesting to see how this moves forward, and this is really a huge opportunity for you out in the field talking to business owners. So QuickBooks has really had to choose between protecting this profitable side of their business in terms of merchant services and opening their new platform, QuickBooks Online, up to developers. And where they have gone with this is definitely more towards opening up the platform. In fact, many processors today now have a QuickBooks plugin of some kind that you can actually use successfully to integrate your merchant services with QuickBooks. So before we get into this statement, I just want to point out a couple of things that you need to understand. Number one, if someone is processing payments through QuickBooks, 99% of the time they are paying a very high rate. They're being overcharged significantly. Secondly, many times your processor may be able to support a QuickBooks integration with their payment processing in some way, shape, or form. And so it's important for you to understand first, when you go into a merchant that's using QuickBooks, you need to start by talking to them about how QuickBooks Payments is integrated with QuickBooks. Like, are you integrating payments right into your ledger? How exactly are you integrating this? Is it through a point of sale software? What does it do exactly? Then take that information back to your processor and talk to them about how can we potentially duplicate the solution that the merchant has while saving them some money. So with that in mind, in terms of how to approach it, let's look down through this statement. So right up at the top here, we have the overall summary. And we can see here that this merchant is a large merchant. They processed $109,000. So $109,000 in credit card processing volume. And they paid $3,624 in fees. And so they have an effective rate that's well over 3%, which would be fairly high for a merchant like this. And so we see that here. Now, again, they really don't give us an enormous amount of data on the statement. As we scroll down, we do get to see the activity summary, which is like the batch report. And so it shows these fees charged. We can also see that they are on a daily discount because of these fees that are charged daily. And so we see they're on a daily discount, which we talked about earlier in another video. We can scroll down here, and now we get into the fees by card type, and they call this the card fee summary. And so we're going to notice a couple things. So first of all, we notice American Express, and it says in here Amex Direct. Now, this may change over time, and in fact, by the time you watch this video, most likely that would say Amex Opt Blue, and those rates might be a little bit different than this, but usually they're going to be priced very high regardless. But in this case, they have what they call a connection fee. Now, again, this is one of the things that makes QuickBooks statements a little bit more challenging to read, and that is the fact that they call it a connection fee, which is a transaction fee. It is exactly the same thing, a connection fee and a transaction fee, or what we call the authorization fee. That's all the same thing. And so for American Express, we see they have a 15-cent transaction fee, and they have a qualified rate for American Express of 2.89%. Which again is neither here nor there. You'd have to look at some different things to kind of match up and see where that would be based on the business type, etc. That's not a ridiculously high rate. However, Opt Blue pricing would be lower than that. Then if we go down and we look at MasterCard credit, and the same goes for Visa as well, we'll look at in a second, we see a connection fee now of 29 cents. And then we see they have a 1.69% qualified rate, a 2.52% mid-qualified rate, and we see a 3.96% non-qualified rate. Okay. Now, a couple of things I do want to point out about this that's interesting. One of the ways that they really do make a good amount of money is that they do not traditionally do four-tier pricing. I actually have never seen a QuickBooks or Intuit processing statement where they did four-tier pricing. And this is really consequential after the Durbin Amendment because, it is so much cheaper to process check cards than it is credit cards. And so this 1.69% qualified rate actually doesn't look that bad, except for the fact that they're not splitting out the check card transactions. Now you can see they really didn't do that much MasterCard. And so if we scroll down a little bit, let's look at Visa where we can see a little clearer. And again, you can see all the connection fees there. And I'm going to scroll down to the next page. And here we see, again, these different interchange rates, the 1.69, the 3.96, and the 2.52. And so we see all of those there all split up and the different amounts that they paid on that. One of the other things that I've noticed about Intuit and something else that this video gives me an opportunity to point out, again, is that keep in mind that tier pricing is not standardized. In other words, tier pricing, it's not like there is, with interchange fees, there is an interchange table, right? And you look at the interchange table and it's the same for every processor. Everybody has the same interchange for that particular transaction. It would run the same no matter which processor you were with. But keep in mind that there is no tier pricing table that says this interchange category maps to qualified or mid-qualified or non-qualified. It just doesn't work that way. And so every processor really sets their own qualified, mid-qualified, and non-qualified map or rate. So the way that it actually works, and I'm going to go back to a different screen for a second here. If we look here at the Visa interchange table, what I want you to imagine for a second, and I think this will really, really help you to understand tier pricing a little bit better. I want you to imagine that every single one of the boxes on this screen here mapping to qualified, mid-qualified, or non-qualified, okay? That's three-tier pricing. So, for one merchant, they may have for some merchant, the CPS small ticket, rewards, that's at 1.65% and 4 cents. For some processors, that one might map to qualified. For other processors, that one might map to mid-qualified. Okay, and so again, there's no standard across the board. Now, again, if you want to think even more than that, we could go four-tier pricing. And so with four-tier pricing, imagine each of these boxes having qualified, mid-qualified, or non-qualified, but imagine that the boxes with check card transactions like the Visa Consumer Debit, the Visa Business Debit, those debit ones, imagine if they were actually categorized as a different one as a check card qualified. Then we could even go to 6-tier pricing, and 6-tier pricing would mean that every box here would either be qualified credit, mid-qualified credit, non-qualified credit, or qualified check card, mid-qualified check card, or non-qualified check card. And so there's literally 6 different rates, 3 for credit and 3 for check card. And so you can imagine that, but again, it's very important you understand that there is no standard out there. And the reason that I point that out, let's go back to our statement here. I point that out because I have noticed that Intuit is one of the worst for this. And what I mean by that is they will place, like if you look at this one category right here, they placed this, $27,000 transaction here in non-qualified and charged a 3.96% fee. So of course this is a mega transaction anyway, but still, who knows? It doesn't even say what that car type is. It's very possible that car type could have been under mid-qualified by somebody else or whatever, but it's highly unlikely and actually impossible that the interchange fee would be 3.96%. And so one of the things you could do for your clients when you're trying to make a sale or trying to present something is point out that one transaction and say, Susan, this one transaction right here at 3.96%, let me just show you the interchange table. And let's just assume for a second, Susan, that this particular transaction was done using a rewards card, a very high rewards card. As you can see on here, it's highly unlikely that it would be more than a 2.95% is literally, that's a downgraded transaction. About the highest one you're going to see on here that's a normal card is going to be somewhere closer to 2.5%. So if we go back to the statement and we say 2.5%, well, that's a 1.5 percentage decrease on this particular transaction, which is literally several $100s in savings on one transaction. And so again, just understand when you're looking at tier pricing that number one, tier pricing with one company could be totally different than another company. And number two, just use common sense and look at these rates and understand that the interchange fees on these transactions is just simply not that high. And so I would say this 3.96% on average is probably marked up on average about 180 basis points. So if you price somebody at, interchange plus 40 basis points, you're cutting, 1.5% off of this markup on all of these non-qualified transactions, which again is probably still conservative because of the fact that Intuit classifies a lot of transactions as non-qualified that, in my opinion, are not. And again, it's not really, there's no standard, so they can call it whatever they want to call it, okay? So you can kind of see this down here. Also, we noticed the connection fee of 29 cents. Again, that's the transaction fee. Now, that looks high, and it is high, but do keep in mind that, for a check card transaction, there would be a 22-cent per item fee that they're kind of including in that. Plus, so really they're marking it up 7 cents. That's really a 7-cent transaction fee over interchange on check card, but most credit cards have about a 10-cent per item fee, and so it's a 19-cent transaction fee on those, okay? So then down here, it just shows us the sum of all the fees, and that's actually about it. And then at the very bottom, it gives us the monthly service fee of $40, which also is a little high. Again, not very consequential when you're doing $100,000 in volume, but still. And then at the bottom, it kind of breaks things out for us in terms of the volume one more time and shows us the count. So this is a merchant with a very high ticket size. And one of the things I always tell merchants is that if you have a high average ticket size, you really need to be on interchange plus pricing because most of the processors try to get you on the qualified rate. This poor merchant here was probably sold with the promise of the 1.69% qualified rate, which again really still isn't that good because it doesn't split out the check card transactions. But at least it's 1.69%. I doubt that their sales rep from Intuit talked very much about 3.96%, even though in this case, the vast majority, probably 80% of their volume, is falling under this 3.96% gouge rate because of the size, their ticket size. High ticket size merchants are going to be much more likely to have these, rewards cards and cards of that nature that are being used. So this was interesting to look at a QuickBooks statement. Hopefully you learned some things about tier pricing here, and I'm excited about continuing the series as we go through the rest of these statements.